Entering into 2022, there was a broad agreement between the real estate industry experts that the annual prices for home growth across the U.S., which was up a whopping 20% in August of 2021, would gradually decrease to a little more normalcy entering into 2022. Those experts were clearly wrong on predicting the housing market, and so far this year in 2022 looks to be on pace to eclipse the red-hot 2021 housing market. In December of 2022, Zillow's real estate experts predicted that the 12-month housing price would decrease by 11% by the end of the year. Then, in January, Zillow revised the figures, saying we would end 2022 up 16.4%. But now, last Wednesday, Zillow's real estate experts have revised its housing market forecast yet again. They now expect this year's home prices to rise to 21.6% in May of 2022 and close the year at 17.3%. Simply put, instead of the red-hot housing market cooling down, Zillow now sees the housing market in the spring of 2022 exploding once again. I'm sure you're wondering what in the world is going on with the real estate market, and will the housing market ever slow down? Instead of housing inventory across the U.S. improving in 2022, the housing market is getting worse. This past January, the number of homes sold was 26% below the levels reached in January of 2021. This past month, January 2022, the housing inventory across the U.S. was 42% below the housing inventory of January 2021, the same time period a year ago. Lack of housing for sale coming onto the market means new home buyers will continue to be forced into multiple offer situations, which forces the price of homes and land to continue to rise. Now Zillow is predicting that home values will continue to rise and possibly accelerate over the coming months. This strong long-term outlook on the housing market is driving forecasts for continued tight market conditions, with housing demand outpacing inventory, wrote one Zillow researcher. If the national average of house prices reaches 21.6% in May of 2022, that would mark the highest average since the housing data was first compiled in 1980. It will also be 5 times higher than the average annual rate of 4.2% that was recorded in the last 40 years, shattering the 12-month high of 14.4% recorded in the years right before the 2008-2009 Great Housing Crash. However, not all of the so-called real estate experts are agreeing with Zillow. Online housing expert CoreLogic is predicting that the price of homes across the U.S. will only rise 3.5%. Real estate giant Fannie Mae is only predicting a price growth for homes of 7.6%. If the forecast of real estate experts CoreLogic or Fannie Mae comes true, it will mark a massive reduction in the home price growth in the U.S. that we saw in 2021. So why are the predictions of real estate experts all over the place? It comes down to mortgage prices, which are starting to rise as the Federal Reserve's plan for interest rate increases looks to be unstoppable. Back in December of 2021, the 30-year mortgage rate was 3.1%. As of this week, the mortgage rates have increased to 4.05% and appears to only be going up. As these still low mortgage rates continue to rise, potential buyers may start to get priced out of the housing market, causing the housing industry to cool down a bit. Usually, such a rise in rates would have an immediate effect on the housing market. But this time, not all real estate experts such as Zillow are sure this mortgage rate increase will slow down the 2022 real estate market. Across the U.S., we've been seeing so many new home buyers that have been waiting to enter into the market that in the event that some would-be home buyers drop out due to higher interest rates, there will be others waiting to replace them and enter into the housing market. So everybody asks this, and leave your comment below about this question. Will the housing market crash? Doubtful to me. But certainly the prices of homes have hit unprecedented levels across the U.S. There were several risk factors prior to 2008-2009 Great Recession that were responsible for the collapse of the housing market that we do not have in this current housing market. What we do have in this real estate market is record-breaking low interest rates that have been causing home buyers to rush to the market, trying to lock low rates in before they go up. Has the Federal Reserve contributed to the rise of homeownership across the United States? There is no doubt. But the Federal Reserve is only part of the problem, part of the problems causing the issues. Many of the large city markets, whether it's Chicago, Los Angeles, New York, or San Francisco, during the pandemic, many people left those big cities for smaller, more affordable cities and towns across the U.S. Boise, Idaho, for example, has the strongest home appreciation for any U.S. real estate market. But now that pandemic appears to be toward the end, many people who were in those larger cities are now returning. The biggest question of all may be, why does home inventory remain low across the United States? This unbelievably strong housing market all comes down to supply and demand. There is a huge demand for homeowners, especially if it's cheaper than renting a home or an apartment. This demand for affordable housing driven by low interest rates is ultimately what is driving the price surge we are seeing. Another factor we have seen, especially in California, is a large influx of homeowners relocating to places like Boise, Texas, Nevada, where tax rates are lower and the cost of living is less expensive. This is disrupting the housing markets of these cities due to the influx of new homeowners entering those housing markets. One question that remains to be answered is, once these people go to these less expensive communities, will they stay there? And how will that affect the real estate markets in the long term in those communities? Currently, interest rates are still very low, but these mortgage rates are expected to rise in 2022 and have already done so. What impact will the rising mortgage rates have on the housing market? Leave your comment below. The Federal Reserve has indicated that there may be as many as 4 increases throughout the year. When the loan price increases, there is generally a slowdown in the housing market. In my opinion, and the opinion of many others, it would be nice to have a bit of a slowdown in the market, giving more buyers the opportunity to have their offers accepted on a new home without doing the multiple offer situations. There is no doubt that the rise in interest rates will have some effect on slowing down the real estate market. Most experts doubt that it will stop the market from increasing, but it is very likely that there will be a cooling off period in the not too distant future. That is the goal of the government, to slow down the inflation, not only in the housing market, but in the national economy as well. Thank you for watching. Please like and subscribe below. I hope to see you on the next video.